Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Federal Reserve officials wanted greater confidence that US inflation was cooling, as well as Joe Biden set for talks with senior Democrats as crisis does deepen. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article we'll talk about is to do with Federal Reserve officials. Now, the FOMC minutes released just yesterday showed that Fed officials thought that US inflation was cooling, but they still ultimately needed greater confidence to cut rates. This comes following the interest rate decision by the Fed, in which Fed officials decided to keep rates at their 23-year high. Now, of course, the topic of the Fed, the topic of interest rates, inflation, that is a topic that we're always covering on this channel for obvious reasons, and its impacts on the markets are monumental, of course. Now, the topic of interest rates and inflation, that kind of thing, though, has been extremely important to cover, especially recently, because of the kind of Biden versus Trump race that we've seen emerge, of course, leading into the presidential election period, and that's kind of combining with the times that we're in, with economies around the world, and the differences that we're now seeing shape up between these key central banks. For example, of course, we're seeing with the ECB, they've already started to begin their rate cutting journey. We've started to see ECB cut interest rates for the first time since they started rising them by 0.25%, and of course that's the kind of way that all central banks would look to kind of cut interest rates, and the ECB has kind of been the first of those Western central banks to really step out and make that decision. Ultimately, though, they've only been able to do that because they've started to see that inflation is on the decline, and also they have been struggling with growth with far more than a nation like the United States, of course, with the Eurozone suffering quite a bit more as a result of the Russian invasion into Ukraine and the adverse economic effects from that, the external shocks which are played out now across Europe. And the Bank of England has kind of faced a similar story, with the Bank of England at the start of the year actually being the central bank in which investors and traders expected to cut interest rates last out of all of those key Western central banks. But in fact, we've now seen the Bank of England cut interest rate. Well, pardon me, we have not seen the Bank of England cut interest rates, but we are now looking and we're expecting the Bank of England to cut interest rates second out of the kind of list of those Western central banks in terms of who's going to cut interest rates first. So we are expecting, it does seem like, the Bank of England to cut interest rates before the Fed and that's of course a very significant piece of information because ultimately the Fed is kind of the leading central bank of the world, and therefore many look to the Fed to kind of dictate their monetary policy. And so seeing these kind of top Western central banks divert their economic policy or monetary policy outlook away from what the Fed is kind of calling for, then that's obviously very interesting to see. Ultimately, though, just like with the Eurozone, that's seemingly only being able to be pursued by the Bank of England simply because inflation within the UK has now fallen to the Bank of England's target, that being 2%. So of course it's very justifiable, to make such an interest rate decision. Ultimately, though, the reason why we haven't seen that interest rate decision just yet is because there is certain worries to do with services inflation and that kind of thing. So that's ultimately why we haven't seen that decision just yet, which I said had already taken place just a moment ago, but yes, it has not taken place just yet. Don't worry. And ultimately, that brings us to the Fed, the last of those three top Western central banks, in which traders are seemingly expecting to be the last of those three to cut interest rates by that 0.25 percentage point mark. And this is ultimately because of the stubborn inflation that the US has been facing. And whilst US inflation was ultimately on the decline at the start of the year, things were looking very optimistic, the economy wise, and we really started to see the Fed even warn investors and traders because ultimately investors and traders were starting to expect a number of interest rate cuts this year from the Fed, with that ranging between 6 to 7 0.25 percentage point rate cuts. And ultimately, the Fed was basically saying that because traders were expecting that, they were actually creating a greater deal of inflationary pressure within the economy as a result of, that affecting the market. So that was kind of what we were talking about at the start of the year, a very different kind of atmosphere to what we're feeling now, with the Fed only being expected to cut interest rates once this year. That's what they've, said themselves. And that's a massive change from 3 expected interest rate cuts at the start of this year, which is, what the Fed initially expected. So ultimately, it's a very interesting time for the Fed. And as we spoke about in yesterday's morning market briefing, Jerome Powell is also very concerned with the levels of fiscal debt, within the US as well. And that's another topic which is starting to possibly affect the way the Fed is thinking. So, lots is facing the Fed, and it's a very interesting time, of course, because of the kind of what's happening in politics, as I alluded to earlier. And therefore, it's very important to stay on top of this kind of topic, with the FOMC minutes highlighting the fact that many Fed officials are starting to recognize that certain retailers were offering price cuts in the following low consumption. Ultimately, though, the news release showed that Fed officials thought that rates should stay where they are until extra information had emerged which showed inflation was on the way down in a serious and sustainable way. The reason rates haven't already started to fall is ultimately because rate setters at the Fed have been experiencing a significant decline had been expecting a significant decline in inflation, which just hasn't been seen yet, with inflation over the past few months or so proving to be stubborn, which of course I've already kind of noted out. With what policymakers are now concerned with, however, is that unemployment could rise too quickly should rates remain too high for too long. At the last Fed meeting in June, officials indicated that they did not expect to cut interest rates more than once this year, which is dramatically down from 3 expected earlier this year. The issue of inflation is not only one affecting the Fed, but also affecting Joe Biden, of course, with polls being dramatically affected by the struggles facing the economy. So, very interesting topic there, and a very important one. And we can kind of loop back to this topic once more when we go to the charts near the end, so make sure you stay around so you see that. We're not receiving too much economic data for the US at the moment, or today, but of course we'll also come to that on the economic calendar, so stay around to see all of that. But the next article to talk about is linking to that topic that we were talking about towards the end of that article, which is of course Joe Biden and the presidential race as things do heat up following their most recent debate, the first debate within the presidential race, which was of course between Joe Biden representing the Democrats and Donald Trump, of course, representing the Republicans. And we've spoken extensively about what that debate was like, what the fallout from that debate has now been, and what we could now expect as we do head closer towards the election period, which is of course in November. And so this topic is very important, and one that is dramatically affecting markets, especially key stock indexes, and even individual stocks, which are always related to the political agendas and what's kind of going on in politics. And of course the different economic policies offered by both candidates always affects markets greatly, which is why this topic is actually so important to understand, because the differing economic policies affects the markets, especially in the bond markets, the credit markets and that kind of thing. And therefore it's essential that we know what's going on, so we know what's going on over there in the capital markets. Now, Joe Biden has now held a face-to-face meeting with the Vice President Kamala Harris over the course of Wednesday. This comes amid the growing pressure that is facing Joe Biden following his extremely poor performance in a debate against the ex-president Donald Trump. Now, we've already spoken about this, but that debate obviously saw Joe Biden kind of achieving a resounding defeat. And ultimately that can be explained by the fact that, he kind of just did not represent what maybe his younger self was. If you kind of look back and look at those videos from when he was, of course, the vice president for Obama, or even before then when, of course, he was representing within Congress, ultimately you can see a very different Joe Biden in the way that he speaks, the way it comes across, and the way that therefore he represents his political agenda. Ultimately, no matter what your political opinions might be, or, what you might think about certain economic policy or that kind of thing, if you're not representing it right, if you're not able to say it, speak it out, and defend it, then really voters will struggle to kind of get behind you. And that's really what we started to see play out following this debate, after we have kind of seen, within the 60%, around 65%, I believe, of voters now believe that, Donald Trump won that debate. And obviously that affects very poorly for Biden. As, often in these debates, we look to see who's going to win over the centre, or who's going to get people to turn out to support them. And, if Biden's not able to convey his policies, convey his messages, then ultimately it's not looking too good for his potential election performance. Add to that we're already expecting Trump to win from what the polls are saying. Biden's already fighting an uphill battle, and if he's not able to defend himself, then it makes sense that why, all these senior Democrats are really starting to get worried. And that's why this topic is now of such importance, with the debate causing many Democrats to fall out of favour with Biden. The debate saw Biden often stumbling over his words, losing train of thought, and ultimately failing to respond adequately to Trump's attacks. This meeting between Biden and Kamala Harris came hours before Biden was then set to meet another set of 20 influential Democratic governors, with this group of governors including the likes of Gavin Newsom, who many have rumoured to be the potential replacement should Biden drop out the race. That said, Biden and the White House have insisted that Biden will remain in place, remain in the race, Bloomberg, though, noted that lawmakers were co-signing letters, Democratic lawmakers were co-signing letters calling for him to step aside. So certainly the crisis does deepen, as the FT does state here in a headline, and it will be very interesting to see how these things do play out, as things are heating up, and they're going to have to make a decision quick, or sometime soon. So we'll have to wait and see. Definitely keep your eyes on this topic though. Lots to think about. Lastly, next talk about after we've covered the chart, after covered the articles, is of course the charts, where quite a bit is playing out. Not so much on the US 30, just as we stated yesterday, but still some interesting things taking place across other assets on the charts. But like always, we're starting on the Dow Jones, we're starting on the US 30, where some interesting things are playing out on some lower time frames rather than these higher time frames that we're usually looking at. As on the kind of 4 hourly, as you can see here, prices really just remained within this range, this period of consolidation that we've seen form over the past few weeks or so. And that's kind of existed since 20th of June, so quite some time, and nothing's kind of happened as a result of this period of consolidation, stagnation, that kind of thing. Arguably that's because of certain issues within the political sphere. You could also say that this is because mixed messaging from the Fed, but ultimately we're not seeing much take place for US indices at the moment. And whilst this is a kind of common thing that we see across US indices over time, it does kind of leave us with a lack of options when it comes to kind of trading opportunities maybe. Now, if we zoom in on the 1 hour though, maybe we can start to kind of note out potential retracement opportunities and that kind of thing. If we draw out this kind of fib retracement, for example, and I pull up those kind of key levels that we see price interact with often, then we can maybe start to note out those kind of key levels. So arguably the price has reacted to that 38.20, which lines up with that key liquidity zone that we've noted out previously. But then again, the way that price is ranging does make it hard to kind of call out these key zones that price is reacting to, and therefore we kind of just have to possibly wait it out. But I'm just giving you the information, and then you make what you want of it. So but not much to say for the US 30, like always though. Next talk about though is the dollar. Where some interesting things are playing out. This is really where the most action is taking place for the kind of day or over the course of yesterday. And this is obviously following the US FOMC minutes that we did receive yesterday. Add to that the US mortgage applications figure, including the US balance of trade figure, and even the US services figure. So we did receive quite a bit of US economic data yesterday, which explains the action that we're now seeing on the dollar. Now, of course, we've seen a sell-off in the dollar, which does mean, of course, traders are kind of looking at the FOMC minutes that we just did, which we just did speak about, and they're kind of inferring a more dovish monetary policy outlook from the Fed. So they're starting to expect the Fed to possibly cut interest rates earlier than expected. Now, why this is interesting? Well, ultimately, we've seen price actually rally to the upside over the past few weeks. Since really the 14th of June, price has kind of existed within this upward rally, and therefore price has stayed within these trend lines and moved to the upside, but ultimately when we started to see these kind of interesting patterns form, and we started to note that possibly we were starting to see a head and shoulders pattern play out, and after price then reacted to that 78.60, I did note that there was now certainly a chance that price would sell off to the downside. And with that FOMC minutes kind of news piece kind of being released, it does seem like traders are now looking at the Fed in a far more dovish light, and therefore the dollar is selling off in response to that, as traders do expect the Fed to now cut interest rates seemingly earlier than previously expected, which explains the sell-off. Ultimately, though, with regards to where price reached as a result of that, is this kind of lower level of liquidity, this area in which price is previously utilized as a key area of support originally, then key area of resistance numerous times, and now more recently a key area of support. So interesting reactions there, interesting moves for the dollar. Definitely keep your eyes on it. Next to talk about though is Euro USD, which has risen over the past few weeks, of course, actually not past few weeks, pardon me, past few days, in this kind of retracement that we've seen play out, as over the past week or so, 2 weeks maybe, price had been ranging and staying within this kind of period of consolidation, like to what we're seeing on the US 30, but far more clean maybe, in the way that price is moving, and staying between these two key liquidity zones. That said, over the part, as I said, over the past few days or so, price has started to move back to the upside, retrace back to the upside, and over the course of yesterday, price has seemingly now jumped to the upside and reacted to that 78.60. And this is obviously, when the markets have factored in the FOMC minutes, and as a result of that, the euro's risen to the upside, making up that difference. But ultimately, price did rise so much to the upside that it's now tapped that 78.60, and seemingly price is now reacting in a bearish manner. It's hard, of course, to decide which way price is heading, but definitely keep your eyes on Euro USD. Interesting moves being made, and it'll be interesting to see whether we now see price fall off to the downside and make its way possibly down to that minus 27.2% Fibonacci extension level, which of course lines up with that key lower liquidity zone that we've noted as the bottom of the market. So definitely keep your eyes on Euro USD. Next to talk about though is pound yen, which just isn't stopping this rise to the upside. Ultimately though, ending off yesterday, we have seen price stall out somewhat around the 206 level, but still over the course of yesterday we've just seen price push to the upside. It does feel like, as this does just represent this very bullish picture that is that has shapen up for pound yen, as the yen does continue to weaken, and that's really why we're just seeing this monumental rise rather than possibly pound strength. It's interesting to see though that price is now rounding off somewhat, and it will definitely be interesting to see whether price does retrace after rounding off around that 206 level. So definitely keep your eyes on pound yen. Next to talk about though is Bitcoin, which is now sitting around the kind of bottom level of the market, that $60,000 Bitcoin level, which of course is acting as a very significant area of liquidity. It is a very significant area of support over the past few months, ever since we've seen this dramatic rise to the upside, which began in February. So this is a key level that price is now sitting at, and this really represents the significant sell-off that we've seen over the past month or so, with only a month ago price sitting around very near to that $72,000 Bitcoin level, and now we're sitting around that $60,000 Bitcoin level, only very recently tapping that $58,000 Bitcoin level. So definitely keep your eyes on Bitcoin. It'll be very important to kind of keep your eye on it with regards to whether price can stay above this $60,000 Bitcoin level, or will price continue this break to the downside. After all, price over the past few days reacted to this very key Fibonacci retracement level of the 61.80 that happened over the course of the weekend and starting this Monday. And since then we have seen price sell off. So in traditional fashion, traditional technical analysis, one would predict, or one would expect price to continue lower to that minus minus 27.2% Fibonacci extension level. But ultimately, this area is such a key area of liquidity, such a key area of support. It's hard to imagine price falling lower. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which has risen to the upside over the past day or so. Over the course of Wednesday, we did see price break out of this period of consolidation that we were kind of watching more so on the 1 hour. And over the course of yesterday, price found that kind of bullish momentum and broke out of that level and has now moved to the upside and has now seemingly reacted to this kind of lower time frame area of liquidity, which has formed around those kind of previous high made on the 21st of June. This action can largely be explained by the FOMC minutes, with the more dovish policy now being expected from the Fed, and therefore buying up gold as a hedge against the dollar. Add to that, of course, the tensions in the Middle East. Gold is a very interesting watch at the moment. Lastly to talk about though is oil, which kind of comes off the back of the topic of the Middle East, and ultimately on those lower time frames we have now seen price kind of retrace and react to that 38.20. So not the 50%, which seemed like a better level for price to react to, but just the 38% where we've now seen price rise back to the upside. It'll be interesting to see whether price can continue that retracement, finish that retracement by rising all the way to that Fibonacci extension level around the $89 a barrel level. So definitely keep your eyes on oil. That's all to talk about on the chart. So lastly to talk about is the economic calendar, where we are receiving quite a bit of economic data today. Now firstly, we are receiving the Aussie retail sales data, followed by pardon me, I'm looking at the wrong economic data, so not Aussie retail sales figure, but instead we're receiving the Aussie balance of trade figure, followed by the Swiss unemployment rate figure, and then the Swiss inflation rate figure. So some very important Swiss data. But ultimately the most important of the day is of course the British general election and ECB monetary policy meeting accounts. And that British general election, of course, is very important to keep your eyes on. Will definitely affect Eurozone markets, but obviously will massively impact British markets as well. So definitely keep your eyes on that. Definitely keep your eyes on polls and that kind of thing. But that's all to cover on the economic calendar. We've covered lots in the articles, lots on the charts, and lots in the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.